Hey y'all, Zach McDonald, your real estate agent with Real Property Associates, and interest rates are on the rise. And I know if you've been following this channel and if you've been paying attention to the news, specifically related to real estate, this is not a surprise to you. Mortgage interest rates as of filming today on 4/26/2022, bank rate is stating that their average rate lock is 5.42%. Wow. We're up a couple percentage points from the same time last year. And I think there are a few unintended consequences here when it comes to rising interest rates. And I want to share some of those with you here today. I don't really want to talk about the future and what's going to happen to the market because I've talked about that in other videos that you can access if you even just check below in the description here. But I want to talk about some of these things I'm thinking about that might be unintended consequences, but consequences nonetheless to increased interest rates. Number one, I think some sellers are probably going to decide not to sell. Even though home prices are at an all-time high and they could sell and cash in on their equity, where are they going to go? And I think as interest rates have gone up, the appeal to maybe sell and buy the next house is losing its luster just a little bit. If you have to pay 5.5%, 6% on your mortgage, and you have a mortgage locked in at 2.5% to 3%, a lot of people that have been living in their homes refinanced over the last few years and capitalized on these really amazing rates. If you missed out, it's too late at this point. But if you did capitalize on the record low interest rates, that is definitely going to be a discouraging factor. I know for me, my wife and I were looking for, or at least casually looking for another house, but thinking about jumping from a 3.25% interest rate to 5.5%, 6%, that's ridiculous. It's a big jump. So if I had to choose, I would still want to buy a different house if the opportunity presented itself, but I think my motivation to sell and buy maybe has gone down a little bit. So I'll at least confess it for myself. I think there's other people that might be in that same position. Now, of course, there's regular reasons to sell: relocating, death, divorce, growing family, things where you have to buy and sell. But I think for some people, they don't have to go anywhere and they may decide to stay put, at least for the near term. I think number two, increased interest in condos. I think more people are going to be interested in condos potentially than in the past few years. There are multiple reasons for that, and I think some of that is that people are wanting to be closer into the city again. COVID's over, or at least the mandates are over. But I think the increase in condo interest will also come because it's more affordable. And condos generally have a lower price point and offer at least the basic amenities for people, especially for the millennial generation, the younger crowd. They may go towards a condo because, well, it's a little bit more of an affordable starting price. Especially with the higher interest rates, a condo helps keep the budget in check and helps stay on track with the budget. I think number three, there's going to be more pressure on the starter homes. If affordability goes down, what people are able to buy also decreases. So some people, it's not really a big issue. For some people, they've got enough money, they can afford to have a larger monthly payment. They might not prefer it, but they can do it. But for others, they're going to stick more firmly to their budget or need to stick more firmly to their budget. And that's going to cause them to consider a different type of house. If it's not a condo, maybe it's a different starter house. Maybe instead of buying the fancier house, they have to settle for the house that's not as fancy. But that just is going to continue to increase the competition for those same houses. So maybe the higher end won't see as much competition, but the lower and the middle price is going to see, in my opinion, a lot more competition than maybe it already was experiencing, which is fairly severe. I think number four, buyers will not be able to buy a house, right? If you can't afford to buy a condo or the starter house, then you're stuck in this place where maybe you can't buy a house right now. You need to save more money. You need to wait for interest rates to go down, which I don't know when that's going to happen. And in this situation, you're most likely, number five, going to decide to rent. And there aren't a lot of rentals, at least in the Seattle area. There's a shortage of rentals too. The rental market's already competitive. So if people can't afford to buy, they're going to need to rent. And that's going to continue to make the rental market, in my opinion, even hotter than it already is, which will put more and more pressure on the prices for rentals, just like we've been experiencing on the purchase side. So I think maybe some of that pressure will shift from the price of purchasing to the price of renting, and that's not going to help anybody either. So I think interest rates are definitely going to impact affordability for people. That's an unquestioned reality, but some of the unintended consequences might involve buyers now having to pay a lot more for rent because they're competing just as fiercely for a rental as they've had to for a house here over the past few years. Thanks so much for watching this video as we look at some of the unintended consequences of rising interest rates. Myself and many at this point believe that we are going to continue to see these mortgage rates rise, and as we do, we may see some of these consequences come into play. If you have questions about the market or you want to talk more about your situation, please feel free to reach out. I'm happy to be a resource for you.